Tokenization is revolutionizing the financial landscape. It's no longer a futuristic concept, it's a reality. It's been confirmed by the likes of the CEO of BlackRock, Larry Fink himself, and many other prominent individuals within the financial sector. And it's reshaping how we interact with and manage assets. In this video, we'll dive into why Hedera and HBAR present a remarkable opportunity for investors to take advantage of this transformation of wealth and this transformative technology. Hi, my name is Kevin, and welcome back to the New Art Capital channel. Now, I know it's been a long time coming. YouTube really played with my patience this weekend, last weekend. So, look, the video's out, we've got it, and I cannot wait to dive into this video and really give you guys a clearer insight into just how big of an opportunity tokenization really is and why Hedera and HBAR are at the forefront of this space. So, without further ado, let's dive into the video. To understand how big of an opportunity tokenization really is, we need to understand what it is. And essentially, what it is converting a physical, intangible asset, say for example, gold, into digital tokens on a blockchain. Similar to how you have your New Zealand dollars on your bank account, you would have a token that's one to one with gold on your decentralized wallets or your hot wallet, cold wallet, those sort of stuff. These tokens then represent ownership or participation in these assets and can be easily transferred or traded on digital platforms. To sum it up, it's the evolution of finance, or whether that's around investment, reducing transaction costs, enhancing liquidity, ensuring transparency and security. Tokenization offers all that in one. And so you can understand why BlackRock, Citadel, Vanguard, all these big financial institutions want a piece of the pie. Now, then that begs the question, why is tokenization so important? Why are all these prominent financial institutions talking about it and working around bringing tokenization on board? Well, it's simple. The financial system as we know today is very slow, opaque, it's inaccessible to many individuals and entities. Tokenization fixes this, guys. It's a technology that can create more inclusive, efficient, and a transparent financial ecosystem, as you will, and as well as provide more liquidity across the markets in general. Because back in the day when we used to have, I mean, we still have money being settled within days, 5 days, sometimes even weeks, and for every $100 you spend, you're spending $25 to even just send the money. With blockchain, with tokenization of assets going through the blockchain, it can settle in seconds and for pennies. And imagine how much money is being moved per day, guys. Cross-border payments market is worth today about $250 trillion, I believe. Don't quote me on that. I think it's roughly around that number. But imagine tokenizing every single thing of value, bringing it onto a blockchain to create this new financial infrastructure. You could be tokenizing real estate market, which is currently worth roughly $600 trillion in total around the globe. And then the derivatives market, oh, that's $1.2 quadrillion, I believe. So even if you just tokenize 1% of these markets, it's a lot of money that's coming on chain. And so you can understand why it's quite a unique time to be in right now, and why I think it's an opportune time to pay attention to what's happening. Follow the money, put your money where their action is, and I think we can come out on the other end of this very wealthy. And just to give you a little hint of just how big this could be, a report by Boston Consulting Group estimates that the global value of tokenized illiquid assets will reach $16 trillion by 2030, accounting for 10% of global GDP. This is from NASDAQ. And then you got other guys like Citigroup predicting $5 trillion in tokenized digital securities traded volume, and BlackRock estimates $10 trillion by 2030. Personally, I do think there's going to be an explosive growth from the adoption of tokenization, the adoption of utility projects that actually solve real world problems in the near slash far future, you could say, but it's going to come. And all this rubbish of meme coins and speculation is all going to disappear. And I would even argue that the crypto market could eventually become one with or its own kind of stock market per se. But that's just speculation. So without further ado, I want to dive into a little bit of Hedera's work with some of the most massive players in the space that gives them the leverage and the boost they need to bring adoption to utility in general and to Hedera and HBAR. So let's first take a look at the general financial space and real estate. As you all probably know, real estate is a very expensive and valuable industry. The global real estate market alone today is worth, I want to say, roughly 600 trillion. Last time I checked, which was about a couple of months ago on Statista, but you don't quote me on that. You guys can have a look at it yourself. Roughly around $600 trillion. And just to give you an idea of how fast the real estate sector has risen in price, 2 years ago, roughly between 2 to 4 years ago, it was estimated the global real estate market value was estimated to be about 350 trillion. So today it's worth 600 trillion. You can already tell that's quite a big jump. And I have to say, thanks to COVID, that happened. So nonetheless, that's not the point. The point is, Hedera is at the forefront of tokenization, especially around real estate and funds, like money market funds, for example. But just to dive a little deeper, Standard Bank Group unveils Africa's first Hedera network node to enable digitization of cross-border trade processes. Now, in this document, it doesn't explicitly say that Standard Bank is going to be tokenizing real estate all on the Hedera network and so forth, but it does have some interesting points here that does lead up to the potential that not just Standard Bank, but potentially other banks and other financial institutions could be looking to tokenize not just their real estate assets, but other assets like funds, like derivatives, etc. So, if we come down here, you'll find that Standard Bank does mention Hedera's technology. It's not just a headline, it's not just a clickbait, whatever. This is from Africa Business Communities com. So it's just another proof to show that not only is Standard Bank working with Hedera or claiming that they work with Hedera for whatever reason, or Hedera's claiming that they are working with Standard Bank, it also shows you that the technology has been trialed and errored. It's clearly very efficient, fast, transparent, and secure to move money, and not just money but assets in general, to do digital trade in general. So that's all very good and shiny, etc., but that's not the main focus. The main focus is just down here in this article, right here. As we see increasing interest in central bank digital currencies, CBDCs, tokenization of assets, and utilization of stablecoins, it has become increasingly clear that digitization of assets will impact all facets of our business, and we must strategically plan for these pieces to work seamlessly together. This is said by Ian Potter, head of DLT blockchain at Standard Bank Group. If you didn't know, Standard Bank Group happens to be the biggest, if not one of the biggest banks in Africa. And Africa is a big deal. Africa, if we just come down here, first off, it's worth about $6.5 trillion in natural resources. And I just saw uh, somewhere here, yeah, these are the natural resources that Africa can provide. As you know, all the mines and so forth are there. But there was a post here that said how many percent of natural? Here we go. 30%. Africa is home to over 30% of the world's natural resources. So trading, very big deal in Africa, mostly exporting. And Africa doesn't have a big share in the global trade market, unfortunately, but it's still a big deal nonetheless. And hopefully, this gives you a clearer insight into just how important this technology is, and and essentially the moves that are being made behind the scenes by financial institutions, banks in general, around implementation of DLT, blockchain, tokenization, CBDCs, etc. Now, I want you all to just imagine something. First, first off, we all know the real estate market is traditionally very illiquid, very inefficient. It takes forever to finalize a mortgage and go through all the paperwork and sign this and that, etc. But with the adoption of blockchain and tokenization, you can invest into properties across the globe, receive a rental income directly in your wallet, and benefit from your property valuation, from your property value appreciation in an instant, within seconds. Maybe it take a minute, but it's still way better than what we have now. I remember when I bought my home, I initially applied for the loan back in December 2021, and then it's not until so we applied early December, and it wasn't until the 25th of January the purchase of the home was finally finalized. Took that long. Went to the lawyers and everything, solicitors. Oh, it was quite a process. But again, tokenization of real estate and bringing it onto the blockchain, we could do this potentially in seconds, guys. Because the security is already there, the transparency is already there. We just need to let the technology do its work. And with the implementation of AI too, it literally can go through in seconds. Your investment could go through in seconds. You can actually divide your real estate up into rooms, and you can just sell your rooms or have someone invest in your room with the expectation of whatever the real estate market is like of then to appreciate in value just the room by itself. I mean, if the property in total, if the property in general increases in value, the room also increase in value. Maybe it's more volatile than the house, maybe less. Doesn't matter. It gives you more opportunities. It brings more liquidity to the market, and it brings new opportunities. And just to expand a little more on Hedera's moves within the financial sector, which, of course, as we have outlined, very old, very inefficient, very ripe for disruption. We also got Aberdeen joins the Governing Council of DLT firm Hedera as it continues to push into digital assets. Now, for those who don't know, Aberdeen, giant of an investment firm, been around since 1825, initially started up in the United Kingdom, managing worth about 600 billion dollars today. This was data back in 2023. So Aberdeen, what they're essentially trying to do is tokenize their investment funds, and so the fact that they've joined the Hedera Governing Council is quite a big deal, especially for a company that's been around nearly 200, almost 200 years now. This means Aberdeen can give Hedera the insights after being around for 200 years into the financial markets, into the investment side of things. And again, Aberdeen manages nearly $1 trillion in assets. It's a big deal. And so definitely something to pay attention to here. But we got a lot more to go over. So let's move on to the DEA. DEA is the Digital Euro Association, and if you didn't know, the president of the European Central Bank, Christine Lagarde, came out, I believe, November last year to basically come on stage and say, "Oh, the digital euro is so important, we need it," blah blah blah, and all that kind of crap. Uh, well, CBDC is inevitable. I myself have had the chance to talk to the uh, the chief economist at the Reserve Bank of New Zealand, and even he acknowledges that all the other world are developing CBDCs, and my brother, who studies economics, he also had the privilege to question him and said, "Is a CBDC coming?" And he has confirmed it. This was again last year, sometime mid last year, when my brother talked to him. So it's coming. I think it's inevitable. Actually, I don't think it is inevitable. 98% of the countries worldwide are either exploring, building, or already trialing the CBDC. And so it's inevitable. And guess what? The DEA recently named Hedera as its newest standard member. And so what this partnership aims to do is to innovate digital payments, stablecoins, and central bank digital currencies. It leverages Hedera's advanced technology for secure and low cost transactions, positioning Hedera as a major disruptor in the traditional finance space. I mean, if it's not so obvious to you right by now, I don't really know how it can be any more obvious. But don't worry, it gets better. We move on to ARX. ARX today, by today meaning April 24th this year, announced the expansion of fund shares it offers in tokenized form with the BlackRock ICS US Treasury Money Market Fund. This builds on launch of tokenized access to Aberdeen money market funds last year, created on both the Hedera and Ethereum network. So as you can see, not only this is not about BlackRock. Oh my God, they're tokening on the Hedera network. No, that's not what's happening here. What's happening here is BlackRock and ARX are working together to tokenize the the U.S. Treasury Money Market Fund, and ARX leverages Hedera to do the tokenization and the trading, etc. This clearly shows you that the adoption phase is coming. It's here. It's this alone to me should be and could be the leading factor, the ripple effect for the adoption of utility projects within the fintech space, within the crypto space, meaning crypto technologies that have real world utility, that solve real world problems, will get recognized and will appreciate in value because of tokenized assets, large trading volumes, money moving at the speed of light, flowing through the ledgers, in and out, all sorts of assets. Tokenized gold, tokenized real estate, whatever it is, traded on a unified ledger consists of a handful of projects, a handful of utility projects that handle different utilities and different aspects of the financial sector, whether that's in settling art, real estate, cross-border payments, etc. Yeah, there will be winners and losers for sure. And the way I determine winners and losers is: are they compliant? Are they growing? Are they making money? And does the project actually solve a real world problem? Does it actually have utility that can benefit the world? If not, then why even bother? So I think I'll leave it at that. There was a few more things I wanted to touch into around even beyond finance with Adera, gaming, entertainment, etc. But we're gonna have to leave that in another video because this video is already nearly 20 minutes now. So I want to thank you all for tuning in. I really appreciate your patience with me, and I know I haven't been that consistent recently. It's just been a lot of work, and uh, I could be trying harder for sure. I'll be honest, but I will still keep trying to post. I will still try. I will still do the right thing. I will still counter all my biases if I have any. And at the moment, I'm doing my best to stick to the facts and go with that. But it is still very crucial to formulate and articulate your own thoughts and your own analysis and do what you will with it. Act on it, sit on the sideline, doesn't really matter. I don't really care. But without further ado, again, thank you for tuning in. Make sure to leave a like and subscribe to our notifications so you don't miss a future video. And I will see you all in the next one. Have a good night. Ciao.